What's up, everyone? It's Ryan Meeks. We're back with another market update. I hope you guys had a great weekend and took some time to have a moment of silence for those that have, given the ultimate sacrifice on 9/11, and always a very, a day that everybody thinks about, and kind of put yourself back to where you were when that happened. So hopefully everybody had a moment to reflect. And God bless. And with that, let's get into some national news. I'll share what we have to look forward to with some data coming out this week, and then I'll give you an update on our market here in Arizona. So first, let's focus on some national news. Focusing on foreclosures. We're seeing foreclosure notices tick upward in the past year, but the bank repos have been pretty scarce still. But that might be changing, and reading an article on Inman.com, we're seeing that foreclosures are rising almost to pre-pandemic levels. But just keep in mind that before the pandemic, foreclosure activity was relatively low compared to the historical averages that we've seen with foreclosure rates. Here's a graph. Also, remember during the pandemic that there were federal and state instituted restrictions on some of these foreclosures, so it prevented them from happening. And looking at some numbers, 34,000 properties had foreclosure-related filings, which is up 14% from July and more than double last August numbers. So that's 34,000 in August. There were 24,000 which actually entered the foreclosure process, and that's about 3 times higher than we saw last August. Now remember, this is nationally, and some states that had the number jump pretty significantly. Oklahoma, 80% from July to August. Tennessee, 74% jump. Virginia, Arkansas, and Washington also all up over 50% more as well from July to August. Now, while these states saw sort of the greatest net change, the greatest delta, they aren't close to the other states that led the nation in foreclosure rates. And number one is good old Illinois leading the way with 1 in 1,926, which is double what the national rate is. Delaware is a close second with 1 in 2,387.
Delaware.
And South Carolina, New Jersey, and Florida all finish as well in the top 5 with the highest percentage of foreclosure filings. And in terms of actually repossessing homes, there's a 28% increase in August from July, putting this number at just under 4,000. Now, while these numbers may seem high or dismal, this is still not as high as they were before the pandemic. A lot of those people that have been unfortunate can still sell their homes as they've gained quite a bit of equity in the past 2 years. In lender news, Rocket Mortgage and United Wholesale Mortgage raised their conforming limits to $715,000 and nearly $1 million in the really high cost markets like Alaska and Hawaii. Now, doing this will help borrowers put down less capital and pay less interest than going into a jumbo loan. Although always check with your lender, because I'm hearing that the jumbo rate is actually better than a conforming loan rate right now. And this difference just kind of depends on variables that are personal to you, like income, debt to income, credit score, and other personal variables. So it's very important to verify your options before committing to any loan. So make sure you're double checking everything I say with a lender, and many lenders at that. Always good to shop around. Right now, in terms of consumer sentiment across the US, only 24% think it's a good time to sell, and 73% actually think it's a bad time to buy. So obviously this relates to less volume and lower prices on homes. Now, what are we going to be looking for this week? The economic calendar picks up. It's going to be a little bit busier than last week. We have CPI, which is the Consumer Price Index, coming out. It's an important read on inflation. And then we have the PPI, which is the Producer Price Index, which is the prices that producers are paying. So we'll also get a read on the consumer's appetite to spend by the way of retail sales. That number will be coming out. And I'll be sure to throw some of these figures in my YouTube shorts, so make sure you subscribe to see those. Those will pop up for you. And now let's take a look at some interesting national market stats. This is showing time. It's what realtors use to schedule home tours across the country. And of course, it has a ton of data. And you can see in April of 2022, requests peaked and they declined by 41.2% since. Inventory nationally, big gains in June and July, like I've said in my previous videos. Then it went flat again in August. And last week, available single-family home inventory actually declined by 1%, and this is the first decline that we've seen since March. Price reductions, they continued to gain speed. Despite low inventory, demand is equally as low. Currently, 40.1% of all active listings have taken at least one price cut. Now, if that number reaches 45%, it means that we are in a very low demand market and sellers will need to adjust their prices accordingly. Remember, this is national. Taking a look at pending sales, according to Redfin, pending sales are down 19% year over year and 4% month over month. Closed sales are down nearly 17% year over year, but are up slightly from the bottom in mid-August. Now let's talk about the Phoenix metropolitan market. Showing time once again. Requests peaked on January 17th and they've been declining since. Requests are down 46.4% since January. Inventory, taking a look at inventory, it's increased by 293% since its low point in March. Price reductions peaked in late July. They've remained elevated since, like I said before, with the national level. They are definitely at a higher point right now. And listings under contract, those have declined by over 31% since they peaked back in March. So looking at closings, the monthly sales average over the past 22 years is 7,165. That's how many closings we've had per month on average. And sales in both July and August fell significantly below the long-term average. July had 5,744. August had 5,861. Now, the first 6 months of 2022 had an average monthly sales average of 8,155. And of course, pricing, everybody wants to know where pricing is. So let's go over some of the prices here. The average price in Phoenix is currently at $549,786. Which is up from $544,918 on August 11th. The median price, however, is down from $450,000 last month to $441,000 this month. And taking a look at rentals, we just recorded the largest year-over-year percentage increase in the rate of new rental listings. There were 3,449 active rental listings as of yesterday. Now, this is up 149% from the same date last year and up 15% from a month ago. And when we're talking about price per square foot, they're also looking at an average listed rent of $1.56 per square foot. And this was $1.61 last month, and last year it was $1.90. So we're not seeing the same downward trend in the average median, in the average and median prices of leases signed. But the upward trend in these appears to have largely fizzled out over the past year. So in our MLS, renting a single-family detached home has become more affordable in Phoenix over the past year, while buying has definitely become dramatically less affordable, partly because of all the higher asking prices, but mostly because of the higher interest rates that we're seeing. So it's not surprising that demand for purchasing homes is so weak, but it is surprising that the rental market appears to be losing demand, at least based on the average rents being asked. So one thing I want to take a look at now is CMI, which is the Cromford Market Index. And this is basically a pretty good forecaster of where prices are going to be headed in the future. So usually what we'll do is look at this city by city. So you can see all of these cities edged a little bit higher: Chandler, Paradise Valley, Scottsdale, Tempe, Phoenix, Gilbert, Glendale, and Mesa. So there's no doubt that conditions are stabilizing, at least for now. The worst areas for falling CMI in the past week are Goodyear, Fountain Hills, Cave Creek, surprisingly Cave Creek there, Avondale, surprise, Buckeye, and Maricopa. And we do still have a few seller markets. If you look at these following markets right here, we have some markets that are in balance. And then we have some markets that are good buyers markets. Now, if you guys want a zip code breakdown on what the current contract ratio or the Cromford Market Index is doing in a zip code that you guys are looking, feel free to reach out to me. If you have any questions, always here to help you guys. Have a great week.